Right. Good afternoon, evening, depending on where you are in the world. This lovely Sunday evening here on the East Coast. Um, in the Trader's Crib, welcome everyone to Sunday School Charting here in the Trader's Crib. And so today, what we are going to do, we're going to start off with mindset, as we always do to get our mindsets right. And we'll take just a little bit more time here on Sunday to do so because we have the time. It's Sunday. We can relax in that. And then from there, we'll move forward into looking at any type of news that happened over the weekend, as well as looking forward into the week as what we can expect before transitioning into charting the charts for next week. Um, and getting into what has happened and setting up our charts accordingly and getting into, and kind of reminding those, especially anyone who is new joining us, the fundamentals of charting and the basics. And then I will leave some time for some questions for you guys to elaborate or further elaborate on concept and theories as we go along today. I will allow time for that. But first and foremost, let's start off with mindset. So again, welcome everyone this lovely Sunday, January 21st, 2024 evening here for us here in the Eastern time zone of the United States. And to get our mindsets right, we are going to refer to Robert Greene's Daily Laws, 366 66 meditations of the year. And if we flip to January 21st, we see that it is titled, Depending on Others is Misery. Depending on others is misery. And I'm actually going to read this one thoroughly out because it's not too long. And he states, there is nothing worse than feeling dependent on other people. Dependency makes you vulnerable to all kinds of emotions, betrayal, disappointment, frustration that play havoc on your mental balance. Being self-reliant is critical. To make yourself less dependent on others and so-called experts, you need to expand your repertoire of skills, and you need to feel more confident in your own judgment. Understand, we tend to make it look as if we know, as if we knew what we were doing, and we tend to underestimate our own. You must compensate for this by trusting yourself more and others less. It is important to remember, though, that being self-reliant does not mean burdening yourself with petty details. You must be able to distinguish between small matters that are best left to others and larger issues that require your attention and care. The Daily Law sums it up and states, it is simple. Depending on others is misery. Depending on yourself is power. And this excerpt comes from, Robert Greene has a series of books. He's also the author of the 48 Laws of Power. And so this particular excerpt is coming from his book, the 48 Laws of Power. So this is the 33 Strategies of War. Strategy number 3, amidst the turmoil of events, do not lose your presence of mind, the counterbalance strategy. So I'll let you guys sit on that for today, as it's Sunday and we're entering a new week. And we'll go from there. All right. So transitioning from mindset into trading fundamentals. Here in Trader's Crib, we're going to start off with Forex Factory. And we're going to preview what is next to come to us for the week. And Sunday school charting is more about charting than anything else. So let me come in here and let's set our dates for next week and apply settings. And now we can see next week. All right. Give me 1 second. All right. So from here, what we are doing, we are looking into Monday and Tuesday. We don't have much going on. We do have Tuesday, January 23rd, a orange folder. So we may get a little bit of action here in the market from that. But overall, our red folders are starting Wednesday of next week, January 24th, and continue on until the end of the week, January 26th. We have flash manufacturing PMI, advanced GDP, unemployment claims, core PCE, and price index on Friday is what we will end with. Okay. So we'll see how these folders affect what the data comes out. And depending on that data, it will help us foresee. If I click the more button down here, it will help us kind of foresee what the overall FOMC federal funds rate decision press conference decision will be on January 31st. Now, looking at this folder, I want to open this up because right now, I think this will update because it usually does to what we were forecasting it to be. And I think we want to see cuts, but we know they could stall first as well, if I recall correctly. And so when it pops up here in Forest Factory, I will let you all know. But that was the overall consensus. And so we'll see what they actually do and see if we'll get any surprises. They usually say consistent to what they're alluding to. So I'm not expecting too much surprise from there. But this week's data will help us kind of sum up and get a good understanding of what's next to come as we prepare for the federal fund, the right. The FOMC to announce a new federal funds rate. All right. And then we'll be entering February. Yay. All right. So looking at CNBC, I did refresh. I refreshed one more time just in case some news came up that just came out. But good old Ron DeSantis, God, I love living in Florida, drops out of 2024 presidential race, endorses Donald Trump. So hopefully, he just sits quiet on a bunch of other things, but I highly doubt that. But we can talk about him later.
Yeah, he should go play in the Everglades.
What'd you say?
He should go play in the Everglades with the alligators.
To all my Floridians in the house, what? We all get tired of DeSantis shenanigans here. Esther is y'all are cracking me up. I can't with the other Floridians in the house dropping y'all comments in the chat. Alligator wrestling, I'm not really opposed. Maybe he needs a good dose of humble pie in whatever way he gets that. All right. Which is probably why he may be sent out. He may have gotten it already. Something even know about. So I know I haven't been following this directly. I try not to get caught up in too much noise and news. There's just so much data out here, you guys, 2024. So I try to stay focused on the charts and what will directly affect the charts. But he wants to be vice president, or we can just feed him to the alligators. I knew that's what you were alluding to, Esther. I already knew it because we live here in Florida, and every retention pond behind every house or apartment complex has the likelihood of having gators. So, yay, South Florida. All right. But that's CNBC headlines for this weekend. And I'm glad that you guys are sharing your 2 cents. So does anybody else have any other 2 cents they want to add to the sentence before we move on to Benzinga? And then we'll start to chart. And I want to take my time on breaking down the charts because it's Sunday school charting, and make sure that anyone who needs to ask questions when we get into the chart, please raise your hand, or anything you want to add, please raise your hand. I just don't want everybody jumping on top of each other the best we can. All right, ladies, thank you. All right. Anything else with him? All right. He, I didn't know that, Esther. He banned it. I'm done. This is why I do what I let me just hold on. Just now reading Esther's comment. He banned the dictionary. So I think this is why y'all stand with me as well, the trader script, because what you can't tell me nothing on me breaking the rules, doing my own thing, figuring anything out for myself. I don't want to hear it. Ex- how you just gonna ban the dictionary?
It was a
Now,
school. It was a school district over. I want to say it's Scambia, I guess the Pensacola area that has banned the dictionary. So thank God you have pulled your child out of the public school system in this raggedy state.
you know, feminine intuition is real, right, ladies?
Yep,
That's what I'm gonna call on that one, Tandra.
yep. Good thing you pulled her out because I was after I started seeing this stuff, I'm like, my grandkids, I need to be doing my own thing because I'm gonna have to homeschool them because there's no way I
You
will let them be
will.
educated by the state of Florida. Absolutely not. And I'm a teacher here, and I'm trying to quit that.
But it's
Well,
in Florida has its issue, but in general, the school system of the United States is not the best. I don't care
agreed.
what state you're in.
I agree.
So, if he want to stand on some biblical God gave man power to name things what y'all know what, but y'all for church, y'all know what I'm talking about. Uh well, you know what? Damn it, so can I. So like what? So, man, when God said that power of man, see, some man took that literally, like in their head, it's a man, and it's like, nah, he means human, female included, right? Because we
Yeah,
all know the power that we play in keeping these men in perspective. Because then when they're not in perspective, they go off and do crazy stuff, right? So it's a balancing act. What? That's crazy. Oh, I love this. So anyway, stand in your truth, ladies, at all time. That's just what the hashtag I'm gonna leave that to. Hashtag stand in your truth, ladies. Because Lord, this man here kills me. And y'all, Esther. Anyway, all right, Benzinga. So more DeSantis. God, I just can't get rid of these people. This is why I don't love the weekend news.
that
That's why I
picture of him
gotta
is
stay away.
priceless. This is what he looks like. This is that picture of him.
And that's what I'm saying. You see my reaction, like, really? Don't stop.
Looking like the Disney goofy character that he's trying to cancel.
I
Jeez.
mean, golly. All right, I'm done. Let's get in the charts. I can't.
Get these. Go to the charts. Go to the charts.
I'm done. All right. So let's do kind of like a quick preview into last week, recover last week, what happened, and plan out what we have coming forward. And then also dispel some things that have been in our private Telegram chat, because I want to ensure that we're all kind of on the same page and confident in what we're looking at and confident of a strategy as we're moving into all-time highs, because I understand that that is nerve-wracking. Right? You just don't know what it has. It's like swimming in the middle of the ocean. But luckily for you, I'm a scuba diver, so I know what it's like swimming in the ocean. I am applying that to the market. So, like, seriously. So we're gonna go for it, but let's recap. So we're gonna start from the weekly time frame on using the S&P 500 mini futures continuous chart on TradingView with the B adjust on. One more time for the people in the back. We are starting with the futures S&P. All right. Futures S&P 500 E-mini futures weekly on TradingView with the B adjust on. The B adjust is down here in the lower right-hand corner, okay, of your chart on the lower corner of the screen, but the chart. All right. So because if you take it off, you're in all-time highs. The patterns are similar, but the candlestick that we just currently made is above and has made an all-time high. If you adjust for the contract changes that have taken place on futures, meaning the quarterly contract changes from March to June to December to December, from March to June to September to December, as we adjust for those, and you, I'm not going to get into epidemiology kind of theory of how they do it, but I understand it. They adjust for those differences, basically, is keep it short. And so now the data comes out to where you have a little bit more upward data to move up on. So we're going to stay on this chart and we're going to adjust for those data changes that happen, those significant like gaps that happen in the chart when the contract changes. All right. Now, first thing we're going to do is we're going to chart our fair value gaps and order blocks that we see or significant candlestick pattern. Say 3 different things we're looking for. We're going to start with the fair value gaps because they're the easiest to see, especially if you use the fair value gap indicator, which is the F and FVG, nephew, and Sam. That's the indicator that I'm using with TradingView. Just so I don't have to draw them. All right, that's the only indicator I use. I don't need nothing else. I don't need volume. I don't need anything else, but I just need to understand fair value gaps and order blocks. All right, so we're going to take a
Randy,
horizontal line. Yes,
Jean
ma'am.
is asking if you can do that, be adjusting on the mobile platform.
So I saw just in here, she is. Okay, I saw her trying to figure it out on the iPad and I went and I apologize that I got distracted. But I started fiddling on the iPad when I saw your comment. Like I'm on the iPad and I'm trying to figure out how to be adjust. And I couldn't figure it out either for the life of me on the iPad. I know that once you set it on a desktop or on a computer, it will transfer over to your mobile device and you don't have to worry about it. Because I have played with a few things in my iPad and I'm always trading on my iPad, y'all. And I can't find it. Go ahead, Esther.
Hey, everybody. So I just was on my phone actually, and I pulled up chart settings. And
Mhm.
under chart settings, if you scroll all the way towards the bottom, right before the time, it actually, there's a little box you can click that says adjust for contract changes.
There you
Would
go.
that be the B adjust? Would that
That
be the
is, I
same
think
thing?
that is it.
All
And
right.
from the long way, because it's not, you don't
Right.
have this button down here on your
Right.
mobile
Exactly.
devices.
Mm-hmm. There you go.
Thank you, Esther. Booyah. Drop the mic. Teamwork made the dream work. All right.
I have a
Lovely.
Droid phone too, Yesenia. So yeah.
Y'all do, because y'all show up green on my iPhone, which we're just gonna leave that alone. We're just gonna leave that personal tidbit alone. But y'all, thank you, Whitney. Thank you. Thank Whitney over there holding the iPhone, Apple all day. Thank you. Okay. Oh man. So, all right. So let's start by getting into using a horizontal line and marking off our fair value gaps. All right. I'm going to use a solid line because it's the weekly time frame that I'm on. And I'm going to mark the open and the close, okay, of this current fair value gap, which is 470.44 and 46.64 if we're charting the futures. Now a lot of us are trading the SPY, but we need the futures to help us trade the SPY. All right. The futures gives us a little bit more data. The SPY gaps a lot. There are gaps that can be filled that we can trade. That's great. But sometimes when the gap is when the gap doesn't want to fill, the futures can help explain why. All right. I'm glad you all found it. Thank you, Esther. Again, teamwork made the dream work. We're finding long way. So I think she said in here, where is it? Let me see if I can demonstrate it on the screen right quick before I get into it. Right here. Here we go. Symbol, adjust for contract changes. Booyah. Under chart settings. All right. So we got the fair value gap. What you can also do is label this for those of you using TradingView, because it makes it a little bit easier to remember what you did when you zoom into smaller time frames. All right. And then what we'll do for the resistance, since our fair value gap can serve as support in this situation, we don't need much else from this time frame, except for resistance. And resistance we can find from previous data. So just to give an example of previous data. Now, let's you know what? I'm gonna give the all-time high strategy that I'm thinking about in the SPY charting example, because I can't avoid the fact that SPY is at an all-time high. All right, does that work for everybody? Hopefully so. And then we can go from there. Right now, we'll stick to candlestick patterns and understanding how to identify those, and what to identify in the candle. Basically, we want to stick to what to identify in the candlestick patterns. And then I'll go to all-time highs, all in the same call. So from this case point, we have this, and now let me just take that off for a second. We have this candlestick pattern here, this doji. We have this long candlestick up, and then we have a doji, and then we have another candlestick up to make the peak, right? Which would be the all-time high with the adjustment of the contracts on. What we're going to do is we're going to take a horizontal line, and my first target, one more time for the people in the back, my first target is going to be the top of this long candle, the very top of the body of it, not the wick, the body, not the wick, the body. And I'm going to label that as like weekly candle body top. That works for me. You label it however you need to label it, right? And then from there, I would either from a smaller time frame find where some daily candlestick patterns is and probably put another horizontal line. But I can mark the very top of this weekly candle here, the very high peak candle body, right? And I can do like weekly candle body, not Dondi, whatever that is, Randy, whatever. Body, can't type today. Body top. You can put like a 2. You can, whatever floats y'all boat, ladies, like for real. All right. And then go from there. So that will be resistance. Okay, since we don't have an obvious fair value gap. Now, if we did have a weekly fair value gap on the chart, we will mark that first. Okay. All right. So boom, support and resistance on the weekly. Now let's come down to the daily, and let's keep going from there. So let me point out, actually, let me go back before, because let me point out a significant candlestick pattern, which I want you guys to kind of put in memory. Okay. We have fair value gaps that we like to fill on the way down. That's the overall concept and theory. We want the fair value gap to fill with a wick or a body, and that can be used as a trade. But sometimes, especially to the downside, the bear side, the short side, it doesn't always want to fill completely. And even to the upside, doesn't want to feel completely right away, but to the upside is a little more guaranteed to the downside. All right. And why is that? Because we prefer a bullish economy. So when we retrace down into a fair value gap such as this, and this is a weekly time frame, so it's significant. We notice we want to pay attention to significant candlestick patterns in combination to candle chart patterns. So chart pattern will be this dip in this V. Boom, boom. The chart pattern over 5, 10 candles. The candlestick pattern that I want to point out is the tweezer bottom on the weekly that's being rejected within a fair value gap. All of that is a very significant signal and a telltale sign of where price is going to break out to. Because it's a tweezer bottom, which is a rejection signal from falling, with each wick in that tweezer bottom getting consecutively higher in a fair value gap of liquidity that says, I've touched enough. I dipped down in here. This is yummy. This is nice. I came back for it again because it was so nice the first time. I don't really like it anymore. I'm pretty much done with it. I'm not really feeling it. It's no longer my vibe. I think I'm gonna go do something else as we go up. Right? Is that y'all like I did that? So this to me was a very key pattern that we rejected coming down. We made a big dip. We retested a neckline, which was another signal, and we're most likely going to break out to the upside. I didn't think we would do it by Friday, but hey, we did it. So the target from this weekly perspective, the first target is this weekly candle here at 48.84. I think if I adjust it on the daily, it comes to 48.85, somewhere in there. Is going to be your first target due to the fact that it's retracing up this long candle. Now, once it reaches the doji, we will potentially bounce and continue up to further retrace up the wick and then take out the rest of this candle body and then continue to make all-time highs from this perspective. That's really easy to do, saying that this is nothing but a little bit of doji and then continue up. It's really not much to break through. It really isn't. It's not like a consolidation of 4 or 5 candles to break through like let's see, just like blocks like this, 3 candles. This is weekly, so I gotta keep it in perspective. It's going to be no more than about 3 or 4 candles. But here, 1, 2, 3, 4, it had to come back up, it had to chop, it bounced a bit before it dropped back down before we finally got back up through there, right? And chopped quite a bit again before getting back up through there. A lot of times when we have smaller candles, it can depend on what it wants to do. So we just need to wait and see. It could potentially, that's one of the first thing I said, potentially break through or fall. It depends on what it wants to do. So I'm taking my first target 48.84 and waiting. If we, so now we come down to the daily and we have support and resistance nicely mapped out from the weekly. And we're going to continue our top-down analysis, and we're going to find, again, starting out, step 1, fair value gaps. Step 1, fair value gaps, right? So with pointing out the fair value gaps on the daily, we're going to point out the most recent fair value gaps to current price action. And usually it's going to be, could be something small, could be something big, just depends on the run-up that we have. Just keep an open perspective of what you're looking for. And, that's the wrong color, green. And we want to mark off this fair value gap. And we're going to label it as such. Daily fair value gap open. Daily fair value gap close. All right. And then on the top side, we will have to come all the way back here. All right. We see where our weekly is. And our daily looks like it'd be a little bit above that. But this is probably where I got the 48.85 from because I took it up to this candle. That's actually 86. To make it perfect. I swear sometimes every time I clear chart and look back at it, it's a difference of a couple cents or a dollar. We'll leave it there. 48.6. I'll move it in conjunction to this larger candle since it's only a couple dollars. And I do think this daily candle will come up and do the thing, but just keep in mind if it will start to exhaust once it gets to this area. Actually, when I zoom in, let's see. I feel like I need to get my eyes rechecked. Glasses. All right. 85.50. I think I had it 50.25, somewhere in there. All right. So that's what I lined it up to be. And then coming further back, because we know that's going to be a target since that lines up so close, we leave that alone. And then if we want to put a dashed line and make it a daily level, then we would take this next level right here because it's in between. It's a level that's in between us getting to the next weekly level. Remember that wick that we saw. So this with 1, 2, 3, 4, 5 candles going sideways is considered an order block. And price is going to clear this order block to the top of this candle and should clear it to fully clear it, come past these wicks and further up here. All right. But the first target beyond, so this will be more like the second target. So target 1, 48.85. Target 2, 49.38. And you can label it daily candles, body top if you want to do the same thing. If you want to say order block, I've done a few different things depending on what mood I'm in. I am female, so I'd be like that. As long as I know what it means at the time, that's all that matters. So we can go from there. And if you wanted to come in and acknowledge these wicks, you can at 49.57. But I like to take it down to the 2 hour and see if I get anything from that perspective before I start overmarking my daily. All right. So this to me is enough because I have to go back to current price because we have to go pretty far back. And that's what I got. And I can also mark, let's just say, you want to acknowledge this other fair value gap again because it wicked through it and there's no body through it. Then you can acknowledge that as well. And to not put too many lines, I'm going to just leave the open and I'm not going to label it. I'm just going to kind of leave it there. All right. So now we're going to come down to the 2 hour and we're going to do the same thing. We're going to find fair value gaps and order blocks. And we're going to base them off of significant candlestick patterns like tweezer top. So after this, I am going to list off candlestick patterns that I think all of you should know at this point. I could do some chart patterns as well, but I'm at least give the names. I talk about them a lot. Try to write them down, revisit this video, pause it, whatever. But I think you should know to get you on your trading way as far as understanding what the candles are telling you. Now that we come down to the 2 hour, we let's see, we noticed that our price action has been pushing upwards towards this 48.85. I don't think it's done yet. I don't know when it's gonna finish. I think in a couple of days, but I think we're gonna get there. So from this pattern, we don't have a true reversal. This doji shows a potential reversal, but we need the third candle in order to confirm that. So There's nothing to say for sure that the price is really going to reverse and take this whole 2-hour fair value gap down to the bottom side either, right? But what we're going to do is we're going to mark it. And we're going to use dashed lines, dotted lines, I mean, to mark that fair value gap. Do the same thing. And you can label it as such, because as you see, as we are coming down to each time frame, we are keeping track of what interval, because the larger the time frame, the stronger it is. The pattern is. We want to understand, as maybe we're watching price action on a small time frame, know what it's coming down to. So 2-hour fair value gap open, 2-hour fair value gap close. And we are good there. All right. Now we do have this smaller fair value gap right here. When a fair value gap is formed on the current candles, so technically right now until another 20 minutes or so, when the market opens, when the future market opens, this is the current candle that closed on. So this candle was in control of how big this fair value gap is going to be. In a situation like this, the only thing I'm going to do is mark the close of the fair value gap. I don't really care too much about the open, because I do believe that the next candle is going to automatically come down here and take out this fair value gap. It's a question of, is it going to take out the second one? And so I'm just waiting to see exactly how far it wants to go, and how, if it wants to leave any wicks in it, meaning that it's going to now trigger my kids in the fair value gap theory, daycare theory. And so I want to know what it's going to do, but I'm expecting this fair value gap to be taken. So I'm going to at least put a support line. However you want to make it a general support line, that's up to you. I'm just going to put a support line for me. All right, that the close of that fair value gap is support line. However if you want to label it, it's up to you. I'm good with where I'm at. So as far as resistance goes, we know that we're going to need to come up beyond this wick here on this 2-hour candle of this upward candle, because these two candlesticks match. So we will need to come up above the more previous one before we push further up to 48.85. Again, I believe that we will do that very thing. It's just a matter of time, right? So if you want most recent resistance, we will just mark top of those wicks. Boom. From the 2-hour, leave it. Done. Your charting is done. From the 15-minute, from here, I would just watch what price action will be doing. I wouldn't really make any other significant lines. I think it would just crowd the charts. But I think this will be a nice setup for you to see which way price is going as you switch between time frames, and hold conviction in whichever position you are trading. Okay. Now, that's the ES. That's the ES, S&P 500 E-mini futures with the B adjust on TradingView. All right. Cool. All right, now let's go over to SPY and let's start to think all-time highs. We got this. We got this, ladies. We got this. All right, we're going to start from the weekly. We're going to do the same thing. We're going to do the exact same thing, but we recognize from the very beginning that price is an all-time high, right? So let's go on with support. Let's do the same thing and knock off the fair value gaps from the weekly perspective. Let's label them as such. Just for repetition purposes. Repetition makes it stick. I would have been like a 4.85 GPA student if all of my education was taught to me in Disney song version. I remember so much in song. It's crazy. All right. So Esther, I'm so serious. All right, by the way, 70 S&P companies are reporting earnings next week. All right, we'll check in the earnings as well to just so you guys can put whatever companies on your brain. Yeah, I'm so serious. They're so catchy. Like, who doesn't know a Disney song? I bet you everybody know at least one Disney song that they can like low key sing off the top of their head, like right now. Like if I said 3, 2, 1, sing a Disney song, everybody got one. I'm sure of it. I'm sure of it. At least one. Um, so anyway, look up Yesenia under the sea. See, there's at least one. My mom over there ain't saying that, but she over there low key singing favorite things from from The Sound of Music. Cause she's the reason I know that song. Right. So there you have it. At least one. Yes, I know that one too. See? Exactly. Oh man. All right. So for all-time highs, let's look at where we just broke out of and go from there. So the most recent high we have is this candlestick wick. We're gonna include wicks. It's not all Jasenia, don't you call me girl and start talking about the Sound of Music, because that is like the first thing I taught my daughter. Jay knows Doe a deer, you know, that whole song, favorite things, the whole thing. Here's the thing. Don't get me started. Okay. So we have the SPY weekly capped at 480.13, right? And we just broke that and we're at 482.43. All right. So from here, we're going to use Fibonacci to help us project Fibonacci with projection to figure out how much further we can go. Maria, see, I'm trying to stay focused. See, y'all a mess. If we're talking about the Sound of Music, I gotta love how do you solve a problem like Maria. Maria, you know what? You can have that one all day, girl. I love you so much. Because I know that song too. I had never thought about that one. All right. So, how do you solve a math problem like Fibonacci? What do you mean by that, Esther? Because Fibonacci is a sequence of
No,
math
I
that
mean,
builds
I
upon
meant just,
itself.
I know that. I just meant like if you sing it, like, how do you solve a problem like Maria's? How do you solve a problem like Fibonacci? We can put that to
Ah,
music.
y'all are so funny. We're gonna make this whole Disney trading vibe. Oh my God, this is amazing. Okay. I've done this before, actually. I've recreated Disney slogans into like, oh man, okay, I'm gonna get creative with it. I'm gonna come back with it. All right. Spy focus, here we go. So we're up at 482. So let's come down to the daily here. So what we got to do now is use previous highs as level of support. I'm gonna leave this one red because I do believe it's going to become previous support. And then we're going to project where price is going to go from there. All right. So we're going to do it though from the daily. Okay. And we're going to do a swinger bird's eye view of the overall where price can go. Now we know prices broke up to the upside. So where's most most likely gonna go? Up. Okay, great. Yay. All right. We know a breakaway candle when we see it, and this is definitely one. So now how do we do this? All right, so we're going to take the Fibonacci retracement tool. All right. And this is going to be our swing low for 66. This dip, these two candles of consolidation, this small daily order block within this larger order block. Okay. All of that applies. And we're going to swing it up because we had a large candle breaking up. and we have another, and we had price reaching a new high here, 478, from this most recent high, recent price action. We want most recent price action for projections. Okay. So we're going to go from 466 to 478. We're going to start here. If we need to make adjustments, we'll make adjustments. We're going to do this together. And I hope that all of you are charting this with me, or taking note, either doing it with me on your own screen or taking notes, or saying that I'm going to replay this recording and pause and take notes. All right. Please pick one. So here we go. All right, this is what it looks like on the daily. It's a small range, but I want to keep it as recent and tight as possible because we want to keep our levels tight, our ranges tight as we go level to level. If it overshoots, fine, so be it. But we don't want to over project ourselves because I've done that before and it sucks. So we'll keep it tight. All right. So we're going to come down to the 2 hour and I want to see how that looks. Just from what I pulled, I want to see how that looks. All right. Because this high, the reason why I'm not taking the current high is because it's still going up. All right. So I want to take the most recent high from there. All right. And from the 2 hour, this looks good. Okay. So price from the 2 hour, price came up, came through the 50, bounced a little bit through the 50, came back up, right? Hit the 23, came all the way up, almost peaked the 0, fell back down because it was the 0. So over, a little bit of slippage here as it came up above and then came down, retested the 50, dropped a little bit below to the 61, tried to come close to the 78, but didn't quite make it there, and then came back up through the 50, and now broke out through the 0. And now here we are. All right. And now from here, it looks like we're going to the negative 50. Now, Randy, where did you get these projections? It's my first time pulling Fibonacci, and I don't have the same levels you have. Okay, let's pause. We're going to we're going to click the Fibonacci tool itself on the screen. We're going to pull up our little toolbar that comes up for it, and we're going to hit settings. Within the settings, you see the Fibonacci levels here that I have checked off and are illuminated. As I uncheck them, the line disappears, as you can see. All right. So the standard levels that are given are usually from 1 to 0. Any level beyond that, you have to put there. I got these levels from books and a few just research. We'll just leave it there. So we're going to, for the negative side, we're going to add negative 0.5, negative 1, negative 1.5. That's what we're going to add. And if you don't have that box there, you're going to check it off. You're going to come in here. Let me bring it back up. You're going to check off any box that's not illuminated, and you're going to change the value in that box. If it's there for you, somehow defaulted, surprisingly conveniently there for you, you just check it off. If you have to change value of any other box, please do so. Get color coordinated as fancy as you like to make you feel at home at your chart with your charts. All right. So now on the positive side, above 1, meaning, well, I should say positive, above 1, you're going to add 1.38, 1.61, 8, and 2. All right. And these are going to be your projection levels. Right now, we're focused on the upside. Okay, so the first projection level at negative 0.5 equates to 485 on SPY. 485 on SPY. You use the same process on SPX. All right. And that's what we're going to use, 485 to take profit to the next level. If it moves past there, now we need to understand and read candlestick patterns. So let's take another pause and segue. Before I do so, before I just keep rambling off, anybody have any questions or concerns based on Fibonacci and where we are now, before I now apply candlestick patterns that you need to understand in order to help you read and know when price is going to turn around as it meets each level, or even if it starts to turn around before it gets to that level. I don't want to go into that next. If anybody's lost or confused, please don't be quiet and suffer their silence. And don't be scared. All right. Fibonacci numbers, all the values total. You're going to have a negative 1.5, negative 1, negative 0.5, 0, 0.236, 0.382. You got, thank you. Take a screenshot. I'm still going to list them. 0.5, 0.618, 0.786, 1, 1.382, 1.618, and 2. This information is also in my Fibonacci course, which is available to all of you as you navigate the online course. When you log in, go to the Fibonacci course, play the video. I have screenshots and slides. If I can make the slides just themselves accessible for those values, because I have them all listed out on just a one slide of all the values that you need to set for Fibonacci. All right. So I do have that information mapped out for you guys already. All right. We take a screenshot. Good job, Whitney. Whatever you got to do. Okay. So these are the levels that we're using. And right now, and those are the standard levels that you want to set. No matter how you draw it, you want to save that as your default template. And then whenever you pull Fibonacci, those levels are just going to automatically be there and you just trade, because ain't nobody got time to be making all them tweaks. So now that we're here, 45 is my next target for SPY. All right. I did jump back in for a longer term SPY call towards the end of Friday, because I predict that we're going to continue up further as well. All right. And then from there, I'm going to read candlesticks. Since you guys don't have any other questions, I'm going to go into the candlestick patterns that you guys need to know. Now, if you have purchased the deck, it will help you. These are the candlesticks I will prioritize in the deck. Okay. If you didn't purchase the deck, these are the candlestick patterns I would prioritize to Google research, because that's just how easy it is as well. All right. Oops. Change the chart on you. All right. Let's go back. Okay. So here we go. From the deck. All right. I'm speaking from the deck. We have Maru Buzu. If anybody has a better way to pronounce that, please tell me, because y'all know I'll be murdering words. So it is spelled M-A-R. And for somebody who wants to type it, I could type it, please. And thank you while I just keep reading the cards. Marubozu. You want Marubutsu openings and closings, bullish and bearish. Marubutsu. That's candlestick 1. Candlestick pattern 2. Abandon baby. Abandon baby. Bullish and bearish. Abandon babies.
Randy, I Googled the pronunciation. You want me to play it?
Go ahead.
I don't know if I'm loud enough, but wait.
And I've played the 2, but I still be feeling like I messed it up.
Yeah, here we go. Murabazoo.
All right, we'll go with that. Whatever floats your boat, just anything you. I think there's a Z in there though. Or Yesenia. Bozu. Okay, open and closing. Abandoned babies. I know it's not right. Y'all hear me talk about them all the time, but abandoned babies. Write it down. Breakaways, or breakaway bullish and breakaway bearish, breakaway candlestick patterns. All right. Hammers and inverted hammers. Hammers and inverted hammers. We don't abandon our babies. Doji. So the two dojis that you need to make note of: Dragonfly Doji, Gravestone Doji. Dragonfly Doji, Gravestone Doji, sorry, Gravestone. All right. Evening Star, Morning Star, Morning Star. Okay. Those two patterns, Evening Star and Morning Star. Haramni. And somebody be so kind to type in the chat. Haramni, spelled Harami. Bullish and bearish. Harami. Study these. These are the key patterns I think everybody in here should know. Engulfing. Bullish and bearish engulfings. And last but not least, tweezer tops and tweezer bottoms to include matching lows. Tweezers, spelled like the tweezers you use to pluck your eyebrows, ladies. Tweezers. Tweezer tops and tweezer bottoms to include matching low. All right. Actually, I lied. That's not the last one. Final drum roll. This is the last one. From the card deck. And I'm sure you can still find some Google research on these. New price lines. Number 8. New price line number 13. Let me say it in order. New price line number 8. New price line number 10. New price line number 12. New price line number 13. That is the final candlestick pattern. New price lines. All right. Those are the top ones I think you guys should know that are going to help you further identify when price is going to turn around, create a new level of support, things like that. All right. There are some chart patterns that I believe that are significant as well. And as we go through this call, I will take another moment to go through those top chart patterns that I believe that are going to help us through this all-time high period. It's going to really come down to your mastery of candlestick reading. All right. Because you have nothing else to go off of. And it's just the way it is. All right. So, as 6 o'clock comes in and pushes price up. So as we push up here, we're going to be looking for those type of candlestick patterns I just listed as signals to let us know when price may turn around. That's all we can do. And you just need to study those patterns. All right. As it creates a high and starts to peak out and starts to turn around and starts to make a retracement move, a pullback that we may need to pull back from, down from, go further down from, and then pull back up from, you're going to need to learn chart patterns, which is what I've been using this entire time in conjunction with fair value gaps and order blocks, right? But the chart patterns help you understand in general, like with the strength of said order block or the strength of what's being built up to do next. I wonder if my order gonna fill on this call. I'll be so exciting. Because it's just sitting there right now looking pretty. So this is just looking great for futures starting off this evening. Because I have a feeling it was gonna run up overnight to 48.85 overnight, and then potentially pull back a little bit before starting. I don't know what I have no idea what tomorrow's going to bring. We have no red folder, but that doesn't mean it won't move on us. So we're just going to see and be excited and be like, yay, yay. All right. So just take it in strides, guys, as we are moving up here and go back to spot. As we are moving up and making all-time highs. Okay, so this is the Fibonacci that we charted. We have signal moving up. We see the futures that just came on. It's pushing up as well. So far so good as a good signal. Okay, as it's going to continue up past the up to these projection levels and potentially surpass them. As we make new levels of support, we're going to adjust our Fibonacci as such. Okay, as we have real good significant swing highs and swing lows, we're going to adjust accordingly. All right, and then play those levels in conjunction with fair value gaps and order blocks, as you know. All right, so take your pens and pens out ready. Take for here are the top like candlestick chart patterns that I think you should know out of if you bought the deck, Google research, but these are the ones that I play the most and which ones I think you should focus on. So for chart patterns, we want to understand and be able to identify triple tops and triple bottoms. Triple tops and triple bottoms. Head and shoulders tops and bottoms. Head and shoulders tops and bottoms. To include complex if you have the cards. To include complex if you have the cards. Cup with handle. Cup with handle. And inverted. Inverted is the bearish. So cup and handle, bullish and bearish. Okay, make sure you get the inverses of everything that I say. Flags. Flags. Downward break, upward break. Pennants. Downward break, upward break. Flags and pennants. High and tight, flags and pennants. High and tight, flags and pennants. All right. High and tight
Spell
is its
pennants
own
for
type.
me.
Huh?
Spell pennants.
Pennants. All right. And high and tight just means it's just a longer consolidation, I would say. But it's still a flag. It's a high and tight flag. All right. Next, we have big M and big W, or double bottom, double top, depending on what trader you follow. Other trader you follow. Y'all, I encourage you to do your own research. But big W, big M. Big W, big M. Double top, double bottom. All right. Next, we have V tops and V bottoms, because that's the pattern we just broke out of. V tops and V bottoms. All right. To include the extended. To include the extended. And last but not least, we have these oh so funkified double tops and double bottoms called Adam and Eve double tops, double bottoms, if you have the cards. Adam and Eve double tops and double bottoms if you have the cards. These would include Adam, Eve, Eve, all LGBTQ community included on these Adam and Eve double tops and double bottoms. Literally, that's what I see. So we're gonna include everybody. This is all inclusive stock market. This is all inclusive trader's crib. So here we go. All right. And that is the last one. Adams and Eves, Adams and Adams, Eves and Eves, Adams and Adams, Eves and Adams, all the combinations. Double tops and double bottoms. All right. Those I think are primarily what you should focus on. There are a few others. And for those of you who have the card, there you go. Bring, share the love. Bring the LGBTQ love. I'm telling you. I told y'all I have a flag for my daughter. It's in her room. So if you guys do have the cards that I promote on my website, and you have any other candlestick patterns that you believe help you and your trading the best, please share them with the community. Drop them in Telegram chat, drop them in this chat, but just share them in general, because I have my perspective and I have my way, and I think it's a good foundation, but you all will discover your own way, and it may help somebody else out, because we all have a different way of looking at this market. So yeah. All right, cool. So from there, now that we got all of our candlestick patterns and our candlestick chart patterns, any questions before we move on? All right, cool. Cynthia says she's gonna sleep with the cards under her pillow. Those patterns. Zorba do all the here go Esther. Go ahead. Get it all in. Those will work. And then start from there, because that's really all I go off of. Everything else is kind of like a variation of those. So from what I see. But again, I'm open to learning new things. All right. So looking at the SPY, we said 485, so that's what we're planning for. So now let's get transition our minds into some actual planning, and let's go into any other tickers you guys want to look at and look for the overall setups, and let's chart for setup purposes and get our charts ready for next week. So we got SPY done, we got Fibonacci, we got futures done, and y'all see what the futures is doing. What's up? Let's go. Send me the tickers and we'll go from there. And then we can sum up with a peer view of the Dow and the NASDAQ, and then close us out for this evening. All right, so here we go, Caterpillar. So let's do a quick chart. We're gonna go through this. We went through the steps. So now let's just chart. So let's start from the weekly. Let's get our fair value gaps in here. Oops, I did not mean to hit Fibonacci. There, that's weekly. Then to break the top at 299, somewhere close to that. Daily, coming down to the daily, that's a pretty fat gap. And this gap, okay, now how I want to do this? Okay, let's do purple for, it's coming, it looks like it's coming up to finish this gap here at 287. And then we have another gap. We have an abandoned baby candle. So the close of that neck, the close of the abandoned baby would be 290. It's kind of doing an M pattern, but I'm pretty sure if I come down to this 2 hour, I may find something that's a 50% of this candle, because it looks like if I mark the bottom of this wick, I wonder where it lands on my 2 hour. And then I'll mark this gap right here before I go to the 2 hour. This Globex gap on the daily. We'll come down to the 2 hour. And ooh, okay. Still no signal as to why price is held up at 277. Let's come down in a 15-minute. What is back here? I will find you. You cannot hide all your secrets. There you are. Ta-da! You cleared the order block. You clear a little order block in here, and that's why price has kicked up. So once you get through that order block, you'll slide on down. That's if you want to get through that order block. It has a nice little wick on it, doesn't it? It looks very nice. There's a little wick if you want to mark the wick, so you can see where it's at. Come back to current price. And there we are. So it ain't even gotten to that wick yet. Ooh, bounced, up it goes, close the gap, fair value gap on the 50-minute, excuse me, or global gap on 50-minute close. And then it will need to chop up through here or bust through here in order to take out this order block. Let me come back to the 2-hour. That's that abandoned baby area on the daily. These candles, I'm not sure how it wants it. If you can get some news behind it, then that'll be great. Earnings for Cat isn't until January 26th. We're coming close to it, but I don't know how we won't play it until we hit Friday. Not sure. Um, with earnings Friday, I wonder if it tries to snag all this liquidity up until Friday. I really do wonder. I really do, like, thinking about all of those variables.
Hey,
Um,
Randy. Yeah, I totally agree with you. I think that's why I was asking, because I wrote it up in Sim. I should have taken it live, but I wrote it up to try to close this gap, right? So to the
uh,
287, that was my target. And I put in an order. I was working. I got filled. I was happy, had it only been real money. But I do think 290 is the ultimate target. I just don't know if it can get there before earnings on Friday.
yeah, and that's the thing. I don't know if earnings is gonna get it there or earnings will take it through there.
I'm not playing earnings either. No, just no, no, no. Because the
So when
last
we
time
think
Caterpillar had bad earnings, it was terrifying. So yeah, no.
Well, so I guess when we think about it, do we kind of relate earnings with with homes, or is that Home Depot?
That's Home Depot.
That's Home
Caterpillar's
Depot
more like, highways, infrastructure,
infrastructure. Okay,
major, Inflation Reduction Act, stuff like that, government
got
money.
it.
The fact that we're not having a shutdown is probably really good for Caterpillar, which is
Right.
probably one of the reasons it wrote up on Friday. That and the fact that the S&P just went completely haywire, right? And the
Yes,
Dow too. And the
haywire.
cat is on the Dow, so that's another fun little tidbit. But yeah, I have really good feeling about it. I'm just hesitant because of all these gaps. See, and there's another gap too above this doji candle at the end of this fair value gap, and then up to that next purple line at 290. So I don't know what's in there. Yeah, that's what I'm talking about. Yeah. See, look at that, 299.
Yeah, but the
Oh my God,
weekly
wouldn't that be
really
beautiful?
does
The weekly is
look,
beautiful.
the weekly looks nice. We came close.
Yeah.
We can come a little further. If we came for the gap, that would really be in the 50. So don't be naive to it. Don't be like, you would have to play knowing that this pullback could happen if you wanted the upside.
Yeah.
So you either wait for it to happen, and if you don't get that
Mhm.
signal, then you play on the breakout up, and then you continue up because that's what cat looks like from this perspective that it wants to do.
Mhm.
It wants to break out to the upside.
Yeah, that's what I'm thinking too. Well, we'll see. Time will tell. Thank you.
That's the overall move I'm seeing from this already slight rejection. And then you have one, two. It could keep coming. I'm not saying it couldn't. I'm just not really sure with news and earnings either by the end of the week what it may do. Um, that's the only thing there. So we'll pay attention to some news. Do we have any home bait? Let me just look. News. I would just buy time. Always safe to buy time. Or just wait. Either way, patience is gonna be the play. Pending home sales, I see that on Friday as well. So pending home sales and earnings. Ooh, we'll see what it does. All right. Any other what ticker is next? What you guys got? Anything? I have to go down my watch list. I have absolutely no problem um doing that. All right. Let's go to Let's do top-down analysis for the rest of my watch list and peep what NASDAQ and Dow are doing, and then we'll just go from there and let you guys trade it out this evening. And hopefully you guys are scalping up the last few dollars on ES for my MES people. But we'll go back and check on it before I get off this call. I don't think you have to rush for it, but just keep an eye on it as I talk. All right, so Netflix, here we go. Top-down analysis. I have the fair value gap pretty much already charted for the top side of the close of this fair value gap at 512. I do believe price is still coming for it. I think you just need to buy a hell of a lot of time, play debit spread, something that will give you enough time and patience to wait on it. But I do think it's coming up to 512 for those of you who may want Netflix. Looking at Lilly from top down weekly analysis, Lilly is trying to make new all-time highs as well. It's kind of hitting a bit of a stall, but I do believe it overall wants to get up there. Get up higher there, I would say. We have this little gap that has been formed here. This was a previous high right here, and then we have this gap right there. And this is all from the weekly perspective. So as price action and news and whatever plans Lily has up its sleeve, we will see what it wants to do. But ultimately, right now, I guess I will move this weekly resistance line up to the previous week candle, not the week we just had, not this red one, but the blue one on my chart, because the next candle is really going to signify the breakout for me. Okay, so I want that previous candle. When I come down to daily, uh, Netflix has earnings on what day? Let me go back to that. Thank you, Esther. Because I'm trying to look out for that. Because I know we're coming up on a lot of earnings. December 20th, what am I saying? Tuesday, 23rd. So Tuesday we have earnings, and we'll see exactly how if Netflix can finish out this gap here. Basically, it's a gap that was way back here, and if it wants to then continue on up to, there's another gap up there actually at 563, and Netflix has a lot of recovery to still be had. Like, it is nowhere near its all-time highs, so it can really keep climbing, and you have some levels, some significant levels to play off of as it continues to do so. Okay. Thanks, Esther. Back to Lily. So as we get news for Lily as well, and Lily figures out what type of drugs it wants to continue to put out on the market, it will, I think, continue to push up and slowly build all-time highs. I do think it'll be like a little bit of a, struggle potentially, but I think it'll get there. It just has to, uh, be patient and see what overall people are feeling as far as health in this manner. All right. Amazon, top-down analysis with Amazon. I have the weekly fair value gaps drawn out here already. As you can see, we have a weekly fair value gap at the top at 155 to 162, while we have a weekly fair value gap at the bottom of 138 to 130. Price looks like it wants to finally come back into this weekly fair value gap based on how the weekly candle closed. We have this nice little dip. We have a what I would pretty much call like a what pattern do I want to call this one? It's not really I'm looking at my little cheat sheet. Not really the piercing line because it's not really bearish. It's just like this. I mean, this may be like a 3 candle thing, I think. And you can't look at the colors. That's the thing about it. Like, it's really a pattern that's based off the pattern itself and not the colors. I can't see. It's like a 3 river bottom. Like, it's one of those ones that I said are kind of like in between, because overall I want you to understand tweezer bottom. And they have a few patterns that are in between these, and this is where all those other card patterns come in. This is a great example of that, because it's like, is it a piercing line or a dark cloud cover? Like, you start to think like that when you see these two, and it's like in between, but it's really this third candle here that confirms whatever this is, and is what I've learned. And so this third candle breaking to upward like this does give a bit of a good signal that we could potentially keep coming up. Um, like I said, a bit of a good signal, so be aware of pullback and things like that. Things happen, but we do have wick left up here in this higher fair value gap. And I do think we would want to come out and eat this wick just like we do any other fair value gap and take it on out. So I think Amazon looks great for a nice trade to the upside if anybody wants to buy some long-term calls on Amazon. All right. Yeah, I think it can really push up there. Now, HD. Okay, and this is just doing a weekly analysis. So HD has this. We're gonna pull this up. We're gonna make this one like no, we're gonna do purple. We're gonna go back to purple. We're gonna do solid. There's a weekly gap. And then we have this weekly. So we're gonna move this. I'm gonna put that there. And we have two fair value gaps here. So nope, that's not what I want to do. I want to make this line purple, 330. And I want to make it a long line. And this little wick right here, I'm just getting rid of that line. And let me see what comes up on a daily as far as in between here to mark this dip. But Home Depot looks so great as far as long-term coming up. Like it has literally come, it broke past here, it filled the gap. It did a dip back, it gave a nice turnaround doji, and then it is moving on up to the upside. It looks like it wants to come right for this order block here. This order block will close while closing the gap at 371. 362 to 371 seems like a nice chunk of change to me. If you measure it exactly, that's about $9.83. So I will play that all day. The wick of this weekly wick here that was created on January 2022, January 31st, 2022. If we get any type of wick over this wick, we will most likely continue up this candle to this next gap. Okay, to this next gap. It may go even further because there's a wick through it. So it's acknowledging the whole fair value gap at 392. But if you want to be modest and take a first target, you can take it at 387. Okay, so just be aware of that. All right. So I do think Home Depot has great potential to just kind of continue running up here. If this ain't the biggest mother loving cradle I have ever seen, I don't know what is. It is just doing a nice dip and a round up. So it should keep coming up if you looking at it from a double Adam double here we have the Eve on Eve maybe a little bit with a I have no idea what this part of the pattern looks like. And then we have a V top. We have like quite a few bullish upon bullish within the block here. It's very interesting Home Depot. All right. Thank you, Maria. Have a great one. So there you are. All right. Looks like WOV. It woves us. HD woves us, maybe. Y'all know I'm so corny. It's so oh my god, it's so bad. All right. So that's what we have for HD. Now, moving on to Apple, I think Apple's doing a comeback kid type of move too, and may finally make its highs up here and break up this further high. I'm gonna clear these drawings and redraw them. We have a nice gap close that's not quite closed just yet, right there, 192. That's the close that I'm waiting for, and I will take profit there and figure out if Apple wants to continue up or not. I do believe Apple will continue up. And then it will be coming for this level of resistance here. I'll take the top of this body, the weekly body candle first, always bodies first, right? At 197. If we break that, then I'll be looking to see if we break that wick at 199 because 200 is where I really wanted to go. Excuse me, y'all. All right. I will mark the bottom of this weekly fair value gap as a close because it's already dipped in and left a few candlestick bodies along with wicks in it. So I'm not really expecting it to close at that point. Looking at it from the weekly, I'm not expecting it to close, but I'll mark it. So as I come down to the daily, I know where it's at, right? I know where my level's at. Now, from the daily perspective, we have quite a few gaps on the Apple. I do not know if Apple wants to completely close the gaps because sometimes it just doesn't feel like it, especially the ones at the bottom. But if it wants this most immediate one, I wouldn't be surprised. I'm not really sure. Oh, y'all, I'm not really sure about this larger one down here, but I will mark it as such. Then I'll mark both because I'm just not entirely sure, and it just gives me a good idea where price may want to go when it may want to go there. Okay. All right.
Yes, Randy,
Yes, ma'am.
I think it's gonna go up as well, only because they took off the heartbeat
I
monitor,
know.
whatever, and they did pretty well Friday. They were talking about it, so I think that the other countries said they're gonna keep it. They're gonna allow the Apple Watch in their country because of that. So that's gonna be real interesting to see how those that happens during earnings for them.
I thoroughly agree. Earnings for Apple is February 1st, and I had gotten wind of the same news just in the I was like, okay. And I was like, this is probably why Apple's going up. So I doubled down on Apple too Friday. Apple and Spy. Um, with the run-ups, and we'll see how it goes from there. All right. Okay. So moving on to Adobe quickly and NVIDIA AMD. So Adobe finally did this push through this order block. I did kind of miss it. I was really more focused on doubling down Spy and Apple and made a decision to not worry about Adobe based on capital management for myself. I do believe Adobe is ready to finish this gap. All right. So I do believe from the daily, this is a daily. I can go out to the weekly for a second. All right, here's the weekly. So from the weekly, let's just remove some of these lines. All right, we'll keep this one and we'll put it as a solid. 548, because we'll put it at the top actually, since price didn't come down to it. So 557. So that'll be entering the weekly fair value gap, which is also entering the top of an order block, as you guys can see with Adobe. As I scrunch the chart up, Adobe has retraced down here and is building up a second little order block because it looks like it may want to continue up to the top of this candle body here at 652. All right. So it looks like that's probably where Adobe is going next. It is an order block within itself as well. To clear it will be 652. If it wants to go beyond that, we're going to be looking for signals, but that will be my first weekly target. Moving down to the daily, we can see that it needs to close the gap at 623 before reaching the peak, most recent peak at 633. That 633 peak will be breached and then it'll be on its way to 652. So if you want to day trade it level by level, I will take the gap to 624. I will pause to see what price wants to do, then take it back to 633, pause again, and then see if I can ride it up to 655, 652. If you have the time to hold it in one fell swoop, then you can do so that way as well, or you can play it with a debit spread to hold it through that time. But I think that's where it's going. All right. All right. NVIDIA just skyrocketed, and I played AMD thanks to Kim, our lovely trading sister, and NVIDIA is making all-time highs. So as it's making all-time highs, it looks like it's not stopping anytime soon. And I do think it can make a few more candles before turning around at all or pausing. So this is the weekly. We can mark it again. Weekly. Let's set the charts up right. and then come down to daily since we don't really have a high here. The price literally just left stuck trying to still go up. It's craziness. But this is where we would, let's see. I don't really have a good swing high, swing low here. Ooh wee. Let's do some fanciful stuff here. All right, come on. So okay, let's mark this gap. Let me get my gaps marked and let me see what I want to do. Gap and daily. Okay. That's a gap though too. That's the entering of a gap. And then this abandoned baby in the middle is not helping anything. So let's see here. Let's mark it like that, 570. Let's come to a 2 hour and see if I can pull a good swing low to swing high. So in a situation where it's running up like this, it does become quite tricky to pull a Fibonacci. I'm not going to lie. It is not easy to do. Because your lows you want, they preferably like good order blocks, not like little stairs, but like significant like steps, if that makes sense. If I could say like big stepping stairs kind of saying, let me see. From the daily perspective, like these just larger blocks of consolidation and in comparison to the smaller steps. Let's go with that. Is what you would prefer to have, or at least some significant levels. In this case, though, I like to come down to a smaller time frame, like a 2 hour, and then pull the Fibonacci. And pulling it in this case, I almost want to keep it tight and pull from this or the bottom of this order block to like the top of this order block. Because that's what price like turned around the most, or like, did the most consolidation. Oh, because it's really, you're thinking now of like projection levels. So you already know price is going up. You're just trying to figure out how much further up, because the retracement is not as clear. So let me just take this off for a second. And let's look at NVIDIA. You have wicks have been strike through fair value gaps. All right. You have gaps on type of gaps. You have no significant candlestick reversal pattern. And so it's like, when are you going to retrace and to where? So, and then when you're trying to still ride this up, you want to keep all of that tighter. So small swing lows and swing highs are okay too. You're going to have to play with Fibonacci to figure out what works best. To kind of give you a gauge of where price is going next, and then keep taking these levels. It's tricky. It takes like a little science to it, I ain't gonna lie. You guys don't have to work it as charts are doing different styles of breakouts, because it's different styles of breakouts. All right. So that's NVIDIA. So our good friend AMD that I'm still holding the ride up. I was looking so beautiful. So here's the weekly on AMD looks like this. Well, even more so, it's like, what do you do? It broke out, closed above previous highs. It's at all-time high. So now what? Now what is come to the, let's see, weekly. The fair value gap is all the way down here, which doesn't really serve us any purpose being this far down with this type of breakout. We can mark it. It's great. Yay. But it is so not as helpful, because we just have a long candle. Then we come to the daily, and then we see this nice little red pullback candle where price consolidate. We have 2 candles of kind of consolidation here before price continued to break up, which is nice. But we'll just mark the fair value gap / physical gap on this one. I'll make this one green. Whoops. All right. Okay, so we have some support levels. Great. Yay. So how do we draw Fibonacci from here? 2 hour. I'll go to 2 hour again for this one. And I like this larger dip, and I like this wick right here as a peak because it price turned around right here and then continued up. But it's not my most recent low. This order block is technically most recent. Technically, this one is too, but because we just broke out of this one, I need one below it. I don't, again, we want to keep it tight. We don't want to overshoot. So we'll come low, high. Ooh, that is totally the measuring tool, Randy. Fibonacci. There we go. Low, high. And we can see our price going and price chopped up nicely at the 50 here. So this doesn't look too bad, right? And then we'll be reading candlestick patterns at each level to figure out if it's going to continue or not. Take profit, wait. The patience, we know where price will retrace back down to because we have the Fibonacci on and everything else. And then when price does a significant pullback, a significant, like really big turnaround, something like that, we'll readjust Fibonacci. All right. So that's all, folks. Fibonacci projection levels, getting ourselves in the mindset for this all-time high. It's here. It's what we've all been anxiously waiting for. And now we got it. So now we got to deal with it. And then there's, of course, a few other tickers that you can still play some other levels with. But are there any other questions before we leave this call tonight as we enter a new week? And here's the futures, here's the daily, here's the 2 hour. As the futures is bouncing off and doing what it's doing. Any questions? No problem. Trade safe. No problem, Esther. All right. Well, if you guys are good, you guys take care. Have a blessed evening. I will see you all on Tuesday for Learn Trading Psychology, where that is Traders Tax Night. So please bring your questions. And if you do not, if you don't make it, please email me your questions so they can be answered on your call and you can revisit them and get your questions answered. Other than that, I'll see you, the rest of you, for live day trading on Wednesday morning. You guys take care and have a blessed one. Bye. Have a good night.